All right, let's start out with oil. We've had, well, we'll start with gold actually first because that's a recent trade after 745, and then we'll go to oil. Let's go to gold. Make sure we understand how to do the J signal. Two great setups this morning already on gold and crude, and right based upon our black line in the sand. Let's go over that right now. Let's go over gold. What do we do on J signal? First of all, we had a trend change here this morning on gold. All right, there's our trend change. So as soon as you see the red triangle, you immediately think sell black. Sell black. Consequently, what made this a nice trade setup is that we have my really long-term support here, 1332.40 for an ABC short, and our bullseye came right into it. This happened at 7:50. This is our time-of-day trade. Anytime in the morning on gold, we talk about this all the time. 7:50 is when they really start moving the market on the gold market. So 7:50 is a time-of-day trade. Excuse me, for us. And we'd like to see a J signal come up at that time. So we had a lot of things going for us, and that started off the trade the correct way here. Remember, red triangle, sell black, look for the bullseye. We got that nice continuation. If you go over to crude oil, on crude oil, we had a couple setups rolling right now. We have a number 3 and a number 1, both working for us. If you look, put that over there. There we go. If we look on gold, if you go to oil, Gerald, if you look, we have two market profiles. We have an HVA and an LVA that overlap over top of J signal on your own charts. And they're very, very important, and it's easy to recognize them. You can change them any color you want, the thickness of the background. I like using red as my HVA, high value area, and then I like using my, my green as my low value area. So there's HVA, here's LVA. If you play all the videos from my weekly conference calls, I have a weekly conference call once a week, and we have all those recorded for you if you want to go back and play them. There's one specific setup that gives you great confluence or combination of a great setup, and that's when you have a combination of my line in the sand, which is a black line, and I'm going to tell you what that's based upon in a second. So we got LVA, I'll make it a little bigger here, and HVA. One of the setups we look for, if we get back inside of LVA, which we did over here, got back inside of LVA above the green, we look to buy the retest on the green for what's called an ABC pattern long. We did that yesterday. I worked great yesterday on pretty much all markets, Russell 2000, S&P 400, gold, oil. A lot of good trades yesterday on a lot of markets, S&P 500. Same setup, hit right on my black line. Those markets exploded. Same thing this morning. We had a blue triangle that gave us a trend change to the upside. Consequently, we have confluence here. Anytime you see these two indicators overlap, these two indicators right here, LVA over top my black line, when they overlap, and sometimes they'll be sandwiched right over top of each other. So gold, it was my long-term support over top the black line. This morning it was LVA on crude. Anytime they overlap, you want to take the first bullseye into the overlapness, so meaning wherever they overlap, the LVA on the retest on the ABC long or the black line. When you come in with a couple ticks of the black line, 2 or 3 ticks, or you hit the green LVA on a retest, you look for the bullseye. That's the yellow dot over top the blue. That's approximately going to put you around 7 ticks from the swing low, because this yellow dot posts about 1.5 bars after the divergence is confirmed. It's going to put you around 7 ticks from this swing low. And from that 7 ticks, we're going to adjust our stop 3 ticks below this swing low, and we're going to try to get all the way up to market profile or hedge fund. This is exactly the same trade we did yesterday, only on the short. The trade yesterday that I called out is a short of an ABC short off of, I'll show you in a second so we make sure we understand it. And this is an ABC long. So yesterday was an ABC short off HVA, and it tanked. And this today is an ABC long off of LVA, and it went up. And they both had the same characteristic. They both were targets of the hedge fund. My hedge fund is an indicator I've been using since 1996. That by itself, this red dashed line over here, can stop the market by itself, all by itself. In fact, it's one of the indicators I use for years, all by itself without anything else. So I like hedge fund as entries and targets on my number 1 trades. This is actually a number 1 sell. So we had a number 1 yesterday and a number 3, and now we had a number 1 and number 3 again this morning. So we have both number ones and number threes this morning already off of crude. And all you got to do is trade two setups. There's the number one. Here's a ABC long on a number three. So you just learn a number one and number three. Now the easiest one to learn is the number three pattern because it's so simple to see that anybody can see it. A number three pattern is simply a break above LVA and a retest of LVA, or break above HVA, a retest of HVA, or break below HVA, retest of HVA, or break inside of LVA, retest LVA. I mean, it's pretty straightforward. I mean, you know, you don't have to read these 1,000 pages of market profile to understand you just have four setups on a number three pattern. It's simple as that. So the way we do it is this. If you have these on your own charts and it works on all markets, there's your low value area, here's your high value. If I get back inside a low value, I want to retest low value for the continuation. That's what I've called a number three. If I get back below LVA and retest LVA, I look for the short continuation. You want to match up with this black line though. When it matches up, you got complete confluence. If I go to yesterday, the same thing happened, only opposite. There it is, right? There's my number three short. We got below, there's a trend change and sell black. This consequently was my HVA. It just isn't on here today. But HVA, as you noticed yesterday, and if you play yesterday's video, you'll see my HVA was right here. Right exactly here. So it was the exact same setup. It was the opposite though. Red triangle, look for ABC short against my black line. It's as simple as that, against my high value area. Then it came down to the number one. When you know it, my hedge fund was exactly right here. Same exact trade, only opposite today. There's my red triangle, sell black. Wait for the bullseye. We got it yesterday. My red fib dot was there and also my high value area. And then my hedge fund called the exact low. Same exact setup. Now today, it was the opposite, right? We have a blue triangle by the retest of LVA, black line. She explodes again. When you know it, my hedge fund called the high again today like it called the low yesterday on that explosion to the upside. So we're doing the same setups every day. If you're new, if you're absolutely new to this, or you're trying to think about getting into, let's say, the J signal for other markets, you just got to know one setup. And one setup, and that's it. And that's a number three setup right here. I want you to be very good number three because number threes are easy to see. You can't screw this up because if you get inside a low value in your own charts, you think retest low value. And if the black is lining up with low value, you got your setup. And that's it. That's as simple as it is. Don't make it any more difficult than that. Because there's only a couple ways to trade it. You get back inside of LVA, you retest LVA. You get back inside of HVA, you retest HVA for an ABC. You get outside of HVA, you retest HVA for an ABC long. You get back below LVA, you retest LVA for the short. As long as that black line lines up, you got the confluence trade. It's as simple as that. Don't make it any more difficult. And our accuracy has been uncanny. I told you yesterday, if we're on the 5 sim Renko, we're over 92%. 92% on the 5 sim Renko on gold from 835 to 1035. It's awesome. The S&P 400, 835 to 1045 or 1035 has been 88%. The DAX, I know they increased the margins on the DAX to 5,000 now. Some of you guys don't trade that. But the DAX, another one, over 87%. So, you know, you just got to trade the plan. That's it.